Starting here with you, Ryan, I know you're a little worried about the drought issue. How much is this going to affect the company?
Yeah, as you alluded to, Trish, this is really going to be a classic example where people are focused more on the go-forward look than the past-looking quarter. And really, our concern is that we've recently heard about a real slowdown in new orders for tractors and combines. That's really been a phenomenon the last few weeks. And so I think the quarter itself is going to look fine, but the concern among investors is going to be how's that slowdown in orders going to impact their guidance for this year and their outlook for 2013. So we're cautious on the stock here, just believing that there's a shoe to drop in terms of their outlook here.
Okay, JC, over to you for a moment. Let's talk about this from purely a technical perspective. Is there anything to get excited about right now?
Trish, I still think that we need to give the bulls the benefit of the doubt. We've been putting in higher lows since June. That June low was at a key 61.8% Fibonacci retracement. That's standard. We put in another higher low at the end of July. And this recent correction has allowed the 200-day moving average to not only flatten out, but now it's upward sloping, and the price is above it. So we're testing these trend lines from the February highs, and I think it's inevitable that we break out. Momentum turned higher in June as well. And I think you need to ask yourself if you like the market here. Deere is very positively correlated with equities, and I think that you have to like the market overall if you're going to be involved in Deere.
Yeah, that's actually a very interesting perspective to say that, you really do need to be liking this market overall right now. Going over to Tim Bigham for a moment here, let's talk about a couple things. One, what are you seeing within the stock? And two, what do you think is the best way within the options market to make some money on it?
Yeah, absolutely. We're seeing the lowest implied volatility, which is level of kind of nervousness, comfort level high that we've seen in about 6 months. We're also seeing, because of that, the steepest what's called term structure volatility. So cheap back month options, expensive front month options. As option guys, we always like to capture that rich premium by selling it and then hedge it with some cheaper premium. So we're a little bit bearish here. Big open interest at the $80 strike, kind of where we're at right now. So given the run-up we've had and kind of the complacency as a contrarian, I'd be looking to put on a slightly bearish trade that would benefit from that flattening of that term structure, buying September 77.5 puts and then selling those expensive August 77.5 puts, looking for the stock to trim it a little, and more importantly for that kind of expensive front month option to come in a little bit.
Ryan, back to the fundamentals. About 5 weeks ago, I spoke with the CEO of John Deere, and one of the points that he made was that, we're looking at a situation now globally where people are farming more and more and more. And American companies like John Deere stand to benefit from that because they're making the equipment that then gets used in all these farms abroad. Talk to me about the international play and whether that's going to be a source of strength going forward for this company.
Yeah, certainly, that's absolutely correct. We would concur with every aspect of that long-term thesis. The issue is that Deere is really effectively overweight North America. It's more than 50% of their business. And the decision process for a farmer in North America right now, it's not that he may not ultimately decide to make a purchase. It's just that in this environment where he's watching his crop wilt in front of his eyes, he's wondering whether and in what magnitude an insurance check will come. That's not the type of environment where he's going to go out and make a $200,000-$300,000 purchase on a major piece of capital equipment. So we really are seeing a real interruption and hiccup in demand. And ultimately, he's right. Sam Allen is right that ultimately ag is a long-term trend that will continue. But over the next 6 to 9 months, I think you're going to see that trend interrupted.